We're going to get rolling here this week, and boy, it's been volatile the last 3-4 days, and it just seems like it's one thing after another. The last 3 days in here that's really hit this thing. So, I mean, we just want to take a step back, look at some things, and what's going on. Well, the whole bull argument really in the ag markets and commodities as a whole is inflation. Okay, what's hot out there? I mean, we had the energy markets hot. I mean, I actually think the hottest thing out there right now is fertilizer prices. I'm probably paying attention more to that because that affects so many of our customers. But then there's markets that aren't as hot. And another one that relates to fertilizer that we highlighted last week that started to turn down is the natural gas market. I know that we have to sit here and focus on the ag markets, okay, whether if it's the grains or the livestock. But what we really need to keep an eye on as well is the equity and the energy markets too, and they have started to turn lower. When we look at inflation side of it, we thought this was an interesting quote from the Fed Chairman Jerome Powell. Yesterday stating that factors pushing inflation upward will linger into next year. I mean, really, the Fed is coming around right now and saying, hey, inflation is going to be an issue. So how do they battle inflation? Well, really, the tried and true way is to increase interest rates. So that's one thing to watch out there. The other thing that really reared its ugly head in here over the weekend was a COVID variant. Okay, and that's a big reason why we had this down move in the market. So what are some markets that we're really watching in here right now? Well, the first one we have up here is the Dow chart. And what has our attention on this is when the Dow broke sharply last Friday with the COVID variant news, we went below the 50-day moving average and now traded at around a 6-week low. And you can see by this chart in here right now, there's a lot of support like in the 33,500 area. That could be a target right now. We would probably see a liquidation trade if that area is violated. That's an important level to watch in here right now on the equity markets. The next one we want to take a look at here is on a crude oil chart. Just like the equity markets, we had a big break in here last Friday. It tried to recover some yesterday and now falling apart in here today. It looks by this chart that the January crude oil could head down near those August lows in the 62.50 area. That is a concern in here right now. The trend has turned down. A difference, though, between the crude oil and the equity markets, as you can see here, that crude oil broke below its 50-day moving average last week. The 50-day moving average is the purple line. The 40-day moving average is the blue line. So the trend of crude oil started breaking last week before the COVID news had hit. An ag market that has been particularly strong and just really rolled lower in here today is the cotton market. You can see the big surge in cotton prices end of September and being strong through November and even making contract highs here 2 weeks ago. This is a market, though, that's starting to lose a little bit of momentum in here, and another one where it's a little bit of a concern, okay, and what has our attention is this down move in the cotton market. The strongest market out of everything recently, we believe, is KC wheat. You could see new contract highs were made last week. This is a demand-led rally. It's a worldwide based rally with world wheat prices rallying. But as you see, even if it does have some solid fundamental support, it can come under pressure when you have the outside markets working lower. This market is a long ways away from key 50-day moving average support. It's still about 40 cents underneath the market. So, a strong market out there to watch is KC wheat. That should be the first one if we do rebound to rebound. As I look over at the corn market here right now, what sticks out to me in particular is how sideways the corn market has been since May. Looking at the March contract right here, we've spent the majority of the time between around 530 and 580, or call it 520 to 590 on March corn. And corn has been a follower, but that last surge that we saw on KC wheat, corn was not able to follow through very much. With corn right now, it's going to be important to keep an eye on that 50-day moving average at 558. If that's taken out, you're probably looking at 520 to 530 as a downside target in here, just based off of the charts and a swing down in momentum. We need to keep an eye on corn specifically today or tomorrow if this technical support area holds. When I get over to the bean side of it, beans is the weaker market. And yes, we did get above the 50-day moving average here about 2 weeks ago, but failed to follow through. And when you take a step back and you look at this March bean chart from the summer on, we did have series of lower lows and lower highs. With today's failure in here right now, it looks to us that March beans could head down to $12. So what do we think is going to go on in here? I mean, this is the last day of November right now, and one of our biggest concerns in here is we're starting to get the feeling that a lot of people just want 2021 to be done. Okay, it was a good year for farmers. It was a good year for investors. It was a good year for a lot of businesses. And with all the uncertainty out there, it seems like everyone just kind of wants to, let's close the books and call it a good year. Well, if that occurs on the markets, we're going to see some liquidation going on in futures. Okay, and if we have liquidation going on, we're going to see some downward pressure. If we're going to get the energy markets to bounce back, we need new buying to step in here. I think another thing that's really important to consider is that there's strong commodities out there on a fundamental basis, and there's weaker commodities on a fundamental basis. The strong commodities, what sticks out is the wheat side of it, whether if you want to look at KC wheat or look at Minneapolis wheat, those are ones with reduced supply, strong global markets. Another strong commodity is the cattle market. Box beef prices have been strong. We've just had cash cattle push almost to a 3-year high here recently. That's another market with some supportive fundamentals. When you look at those softer fundamentals or the weaker markets out there, the first one that really sticks out is the bean side of it, as you have really favorable growing conditions in South America. You're going to have growing ending carryouts there, growing ending carryouts here in the U.S., and our export pace is relatively slow. So if you're going to bet on the lower side, you probably got to look over on the bean side of it. When I get to some final concerns in here, on this market, and this isn't, looking at the charts or looking at the supply demand fundamentals. This comes to a little bit of a feel, and I have to admit I'm more neutral on corn. I think that this corn market should hold together in here with a strong domestic market. Cash basis levels are firm. There's really good ethanol margins, even with the drop down in energy prices. And you look at the cost of production in here right now, so you head into 2022, that corn acres, can decline, and I think that does offer some fundamental support. But a comment that we've heard over the last couple of weeks was, with the price of inputs on corn, prices really can't go down, okay? And that's one thing with these commodity markets. If no one thinks they can go down, hey, that's where we do end up getting some pressure in. So that is a little bit of a concern for us, on the corn side of it. When we take a step back, though, in the big picture, and we've been consistent with this over the last couple of months, wheat can be the bull leader in the market, beans are the weak link, and corn is going to fit somewhere in between. If you have some suggestions on some webinars as we close out the year, feel free to let us know. And you got to keep in mind, it was almost 1 year ago when we started doing these. So I think we're on about 48 weeks in a row consistently on cranking these things out on Tuesday. We appreciate you tuning in and watching. Make sure to like us on our YouTube channel. If you have any questions, like I said, contact us, and we want to bring content to you that you are looking for. Have a great day.